Okay, peeps, welcome back. So today we're going to go over the Grayscale Trust and the FOMC meeting and how the markets reacted to that. So with that being said, let's get it. Okay, so before we actually get into the Grayscale Trust, I want to go over a few things here. So CPI and the FOMC, those both happened today on the same day. Just so you all know, we did tell you on X. But as you guys can see, based on pretty much the synopsis of what the meeting was about, so they are holding rates again for the seventh straight FOMC meeting in a row, and are currently forecasting only one rate cut this year. I do want to bring up again that at some point Biden did say that there was a high likelihood that there was going to be at least a rate cut this year. Again, presidents historically usually don't talk about the Fed, even though they have a close correlation. The White House and the Federal Reserve usually work pretty closely together. They usually don't talk about it openly, but that did happen. But that's not going to matter when Trump gets elected, because I'm expecting Trump to slam rates into the floor, basically to zero. That might scare a lot of you. But if we get something like that, then there's likely going to be a V-shaped recovery in the market. So there might be an epic 2-3 month crash, and then basically just a moonshot straight up, kind of like we saw in 2020. So basically what the Fed, or what Powell came out and said, was instead of doing 2 rate cuts this year, they only expect to do 1. And they're going to bump up from 3 rate cuts next year to 4 rate cuts next year, which, whether that's actually true or not, I don't know. It's a projection. It's not set in stone. As you guys know, the Fed is data dependent, as they say, so they can change their mind at any point in time. What I will say about this is that the Fed is probably likely not going to come out and tell people when they plan on cutting rates. They're probably just going to come out and say it at any random meeting. Nobody knows when that's going to be. Reason being is because if they tell it to the markets ahead of time, that could potentially cause inflation, which essentially goes against everything the Fed's been doing for the last 2 years since March of 2022. They've spent basically 27 months at this point trying to get inflation under control. So they don't want to give any indication that they're getting ready to cut rates. They're just probably simply going to come out and boom, one meeting. Maybe the market's like, oh yeah, they're just gonna keep rates the same, and then next thing you know, Powell says, oh yeah, we're gonna do a quarter basis point cut today. That probably likely is gonna happen. The reason why they announced Fed hikes ahead of time is because they wanted the markets to know that they were going to get inflation under control ahead of time, so that the markets would adjust. This is just my opinion, of course, that they would adjust to the rate hikes, because, by giving the signal that they're going to hike rates, that ahead of the rate hike, that already sets into motion the effects of the cooling of inflation, right? But if they come out and say, well, we're going to cut rates, 3 months ahead of time, well, then inflation might resurge before they actually cut rates, and they don't want that. So now I'm going to go ahead and get into the CPI. So you can see CPI for the core inflation came down 0.2. The CPI for the headline inflation came down 0.1, so that was very good. The markets absolutely ripped to the upside this morning. The portfolio we have in Robinhood was up like almost 5% at one point, so absolutely huge. As you can see, crypto also had a massive rebound as well. Not as large as it was before the FOMC meeting, but still pretty big. So at the peak of this thing, you guys can see that we were up $2,000 from basically the bottom here. So massive increase. And then basically 30 minutes before the FOMC happened, markets got a little scared, and then Powell came out and said, oh, we're not going to cut rates yet, and the markets don't want to hear that. So there was a slight pullback. I do expect, though, however, because they're holding rates steady, they're not cutting, but they're also not hiking, which creates certainty in the market. Likely, we're still going to see higher prices until the next FOMC meeting. That's what I expect to happen. So let's get into the Grayscale trusts. So LTCN, all of these Grayscale trusts, by the way, they were up a lot more than this until the FOMC happens. So, it looks like Powell kind of threw some cold water on the markets after the CPI data. So that kind of sucks, but is what it is. You guys can see we have a little bounce off this trend line. We have a couple of days left to see how this is going to play out, but it either closes up into the support, which is between 24 to 27, or we'd basically be looking at the trend line as support. So that's about $20. If it gets below that, you'd be looking at roughly about 15 to 13, somewhere in there. And the swing high is up at 54. Again, I have told you guys before that a lot of this is kind of predicated on the possibility of whether Powell and the rest of the Fed members are going to cut rates or not. So from the current price to the swing high, 142% move. From the trend line to the swing high would be roughly about 163%. And let's just say it comes down and touches the top of this support down here to the swing high would be 256%. This could just be another dip buying opportunity. I mean, if it stops here or even here, I mean, the cheaper the prices get, the further your purchasing power goes. So that's one way to look at it. So BCHG, this is a little different. So this one's not hitting the trend line. It's coiled in between basically the downtrend line and support. Historically speaking, this is kind of a bearish pattern, but not necessarily. I mean, we did have a breakout here, did have a breakout here. If this was a descending triangle, which is pretty much what this support in this trend line is playing out, and it does confirm to the downside, that would be a sell-off. Of course, descending triangles are bearish patterns. However, every single time we've had a break of these trend lines, it's always gone up. So as of right now, support currently is between $10 to $12.60. Target still remains the same, sitting up there at 24 bucks. So basically, from the current price to the swing high up here is going to be about 120%. I mean, it's like $1 difference between the bottom of the support and the current price, so it's not really that much of a stretch. HZEN, nice little hammer candle here. As you guys can see, it pretty much got sucked right back up off support, so that's always a good sign. Ideally, this thing closes as a green hammer candle at the end of the week. That would be the best case scenario, in my opinion. And thereby, the trend line, as you guys can see here, still holds its support. That would be, in my opinion, the best case scenario. So measuring it from the current price to resistance, which basically is between $7 to about $8. As you guys can see, that move would be about 67% to the top of that range. And then the swing high up here, which is about 10.5, is 116% move. If it does come back down to support, that's going to be between 380 to 420, just so y'all know. ETCG, it's looking more and more likely. We have a spinning top here, but it's looking more and more likely that this is likely probably going to, I would say, probably retest maybe again at $11 at the bottom of this channel. That does seem likely. So from the current price, we'll basically just measure this to the swing high up here. We'll be looking at about 63% move. Again, that high is at $19. Trying to think of what this was. This was for potentially an inverse head and shoulders pattern, if I'm not mistaken. So that target is 26.5 bucks. If I were to measure it from the current price to, let's say, that target up there, 120% move. Again, there's roughly about 60, 70 cents or so difference between basically the bottom of this channel and where the current price is. So pretty ideal entry point. Take it with a grain of salt. I mean, what you guys choose to do with your money is your business. This is not financial advice. So ETH is coming down. It is a possibility that this is actually, let me actually get rid of this real quick and redraw these. This could be some kind of bull flag here. Although it's not really convincing me because these are all red candles, but it's possible that could actually be some kind of bull flag forming there. So the bull flag target, again, is going to be right here at $58. And then we have this cup and handle. So massive cup and then handle, which did actually confirm a breakout bullish. The target for that is all the way up at 165 bucks. So pretty massive move. I would say likely if this thing is going to pull back anywhere, it's probably going to pull back to at least the top of this support. The EMAs are pretty much sitting right there. So that's going to be roughly about $28, $29, somewhere in that range. So if we get a move from there to the bull flag target, that's 99%. Again, that's at $58. And then the cup and handle is $165. That would be roughly about 450%. So Phil G, again, this does look like it much more so like an inverse head and shoulders. If this is the right shoulder and we're about to have a breakout, the target's going to be all the way up here at just shy of $600. However, if it does get smashed to the downside, it does pull back, which based on the FOMC meeting we just had, I would say that's not likely. But I mean, it depends. It doesn't just depend on what the Fed says. It also depends on some other things like, the technicals and the charts, dark pools, what the whales are doing, fundamentals, earnings season. I mean, there's a lot of stuff at play. So, but if for whatever reason it does pull back, 36 to 40-ish dollars, roughly about that area, is what we'd be looking at for support. So just from the current price to that target up there is a 511% move. And if it does pull back into the zone somewhere and goes all the way up to this target, it's almost 1,500%. So pretty massive upside there. So GBAT, this thing doesn't look like it wants to hold on the flag. But again, I mean, we do have a couple of days left, so this could always reverse in the coming days. If it does hold as a flag and break out bullish, the target would be all the way up here at roughly about $45. So pretty much from the current price of the swing high is 145%. Again, that's at $32. And then at the bull flag target would be 240%. Now, if it pulls back to the trend line, which again is going to be roughly around $10, that would change things a lot. So the move up to the swing high would be 233%, and then all the way up to the bull flag target would be about 363%. GLIV, so we got the hammer candle. This is looking green. That's all good. It could possibly move up from here, or perhaps maybe even have a retest and then bounce like that. I mean, we saw something kind of similar like right here. This hammer candle happened and then it pulled back and then it took off, as you guys can see. So this one, not really so obvious. This is actually kind of a little bit weaker move, but if it's anything like this move here, has a slight pullback and then boom, rips to the upside, that could be very similar to what we're seeing here. So again, the high up here is at $80 on GLIV. If it just moves from the current price to the high, it's going to be roughly about 126% move. If it gets a pullback, it's going to pull back probably somewhere around $25, I would guess. To the high would be about 221% move. It's also possible it pulls back to the red EMA and we get some kind of wick down and then a pop back up like this. Again, the red EMA is roughly about $23 as of right now. G-Link, this thing is doing a whole lot of nothing, basically just going sideways. The potential pullback area is going to be roughly around $85. So I would just say this whole entire zone at this point is a possibility. So if I were to kind of draw the trend line out like that, you can see all the touch points there. The trend line does go all the way down through the support. It doesn't necessarily mean the support's not going to hold, but we're kind of looking for like a crossover of the trend line and the support, as you guys can see it happen right here. So anywhere in the support could bounce. Again, that's going to be 67 to 84, and then the all-time high up here is $220. So if it pulls back, I mean, this thing could pull back anywhere from 25 to roughly about 42%. That's a possibility. However, if we get a rip, let's just say maybe at the top of this range, which is where a lot of candles have traded previously, all the way to the high, you'd be looking at 164% move. So that's still pretty good. I mean, that's more than double your money. GSOL, this thing does kind of look like it maybe wants to break down a little bit. It's hard to say exactly where it's going to bounce. I mean, it could bounce at 325. There's a lot of kind of candle bottoms there. If not, it's probably likely going to go all the way back down to the support, so 205. Me personally, I would not touch this unless it got to 205 if I was going to buy it. So we'll just do the two measurements. So basically from those candle bottoms to the high up here, which again is 590, it's about a 79% move. If it pulls back to the start of this kind of bullish zone here to the swing high, about 189% move. GXLM, nice little bounce off of the bottom trend line. As you guys can see, it has actually held, at least as of right now. And this is a hammer candle, so ideally we would want this to turn green before the end of the week. So that would be a green hammer candle, not a red one. That would indicate some very clear bullishness and potentially even a bottom on this thing, because a lot of times when green hammer candles do happen, that usually signals some kind of bottom. Now, they're not always green. Sometimes they're red. Sometimes they're dojis. It just kind of depends. But it being green would be like the most bullish case scenario at the bottom of a potential swing low. In this case, this could be a swing low because it is at the trend line. No guarantees, but that's kind of what I'm seeing right now. So the high on this thing, $70. The trend line currently sits at $31.50. If I just measure it from the current price, which is about $3 or so above, the trend line is about 100% move on GXLM. Mana. So we did have a nice bounce here, but then it has kind of faded the move. So that does happen. I mean, this thing could bounce quite a few times off support before eventually actually ripping to the upside. That's possible. So the all-time high up here is at $70. If it goes from the current price to the all-time high, it's a 197% move. If we get a pullback, let's say into the top of this support zone here, which is also a channel, that would be at roughly about $20. It would move all the way up to 255%. So Zcash sitting pretty much perfectly on support. Excuse me. You guys can do what you want to with that. I would say if this thing is going to drop to the next support level, we would have to get a red candle close below this red EMA. As of right now, that's just not happening. So I would say this is still likely going to be the support zone. And again, that's between 440 to about 510-ish. And then the swing high up here is roughly about 10.25. So from the current price to the swing high, as you guys can see, it's 134% move. So anyways, this is the Grayscale Trust plus CPI and the FOMC. Hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.